Welcome back. We took a brief hiatus from Crash Labs, but now we're back with a vengeance, reporting to you live from Beaver Creek with a little bit of a delay. That's okay. Um, I have two friends here from Westhaven, but both of them come with unique and interesting backgrounds, and I think our viewers can learn a lot from them. I have Shaun Pollard and Sean Thompson. Sean is a founder of Westhaven, and
Yes, Sean.
this Sean and this Sean. How long have you been with Westhaven for?
Just about 4 years now, coming off of Atlantic Gold, which sold our Moose River gold mine to St. Barbara for about 800 million. That was a big transaction. Prior to that, I was with Kaminak Gold, which sold the coffee project to Gold Corp for 500 million.
You know how to pick them.
I see a lot of similarities with Westhaven. After the Atlantic Gold transaction, Sean and I were talking, and he said, "You got to come up and visit the site." So he picked me up. 2.5 hours later, we were on the Shovel Nose property where they drilled 18 meters of 24 grams, 13 meters of 40, high grade gold discovery off a highway, Canada, BC, 30 minutes from the city of Merritt, where there's the core facility, staff, people, supplies. And I just kind of looked at it and I said, it ticks a lot of the boxes that made Atlantic Gold and Kaminak successful. Grade, good jurisdiction, stable rule of law, government, cost profile, a lot of things just tick the box. So
So how did like your background then, Sean? Like how do you know what boxes to check? Like what led you to the point where I guess you joined Kaminak first, but
yeah,
you worked with my wife at Hunter Dickinson.
yeah.
Was that your first foray
Well,
into mining
Hunter
or?
Dickinson was, I was cutting my teeth, if you will, into
Yeah.
the junior mining business, the world of junior mining, and had some success there with a few projects, some takeovers there that were, substantial. But really, it wasn't until Kaminak and Atlantic Gold that, I'd made a decent amount of money and had some good success. And I wanted to make sure that my next venture was into a project that I believed in and thought that, hey, this could be the next big transaction. It doesn't always happen as quickly and it's not as expedited as you'd like, but I still do see in time this project, the Shovel Nose Westhaven Gold, being acquired by a mid-tier or major, when we find enough gold. And we'll talk about cost profile and
Yeah.
things like that later, but maybe we should, the founder Sean's here.
Yeah, Sean, how did you put it together and what's your background? What led up to Westhaven?
Prior to Westhaven, I spent about a decade in corporate finance, specifically institutional equities. So I was helping resource companies raise money to advance their properties. I was based out of London for a majority of that, and I made a decision to come back to Vancouver and do my master's of business at UBC. And when it looked like I was finishing up that degree, it just so happens that Gareth Thomas, who another founder of Westhaven, the CEO, president, his prior company was just acquired, so he was out of work looking for a new job.
What was his prior company?
He was working for a company called Staccato Gold,
Okay.
and in my previous life as a banker, we had raised Staccato Gold 20 million bucks, and
Yeah.
so in the depths of the 2008-2009 market, Staccato was acquired. Gareth was basically looking to do something new. I was coming out of my MBA, and so he said, "Hey, listen, you've got good experience on the exploration side. My background in corporate finance, now all we need is a couple names to attach to the deal."
Hmm.
And we were fortunate enough to attract Gareth's father, Glenn Thomas,
Yeah.
a PDAC award winner, discovered multiple projects, probably best known for the Diavik, which is one of the world's richest diamond discoveries. It's still in production, but we were able to attract his father and his father's partner of 30 years, Vic Tanaka, to basically become the gray hair, the expertise, and then Gareth and I were the horsepower.
Yeah.
And that was 2010. And from 2010 until today, we've been basically building a company that's focused on really early stage exploration, recognizing that exploration, it's the lifeblood of the discovery, right? If there's no one doing the exploration, if no one's making these discoveries, then eventually all of the deposits that are producing are going to run out of ore and we're going to run out of material. So
Yeah. When I met you guys in Vancouver, we had that big night at Cactus Club on a Wednesday. So when was that? Because I remember the stock was at like 5 or 10 cents. And
that was
like after we went up to the office at like really late for a Wednesday.
Yeah,
And you're showing me the core, and I'm like, whatever. And then I missed the boat on that.
yeah, I remember
Yeah.
that, sort of.
Yeah.
That was 2016, I believe,
That
2017.
was pre-shovel nose discovery and stuff, right?
Right. And so
Yeah.
we went public on the Shovel Nose property, which is now our flagship asset. We went public in 2011. You couldn't have picked a worse time.
Yeah.
Gold just hit $1,900, and for the better part of the last decade, we rode it down. Right, 2015 it was $1,000,
Yeah.
and we had managed to keep the lights on, largely because we were financing the deal ourselves. I mean, even right now, we having been around since 2011, Westhaven. The ticker's WHN on the venture, we only have 140 million shares out, and we still own close to 25% of that float, right?
Yeah.
So we eat our own cooking. We're heavily aligned with our shareholders. But at that point in time, our stock was maybe a nickel.
Yeah.
Flash forward to 2018, I think we hit a high of 150.
Yeah.
And that happened all relatively quickly off the back of some very high-grade drill results from what is now our flagship property.
Yeah, so it was a grind, and it still feels like a grind now. How do you guys have been taking meetings and stuff like that? How's the environment
Well,
here?
the
Is like,
sentiment is horrible. It's as bad as I've seen it in my 13 years doing this job.
really even worse than
2000,
eight,
yeah,
like the
but you
crisis and
forget 2008 when everything collapsed, and then gold went down with everything too, liquidity, but then it shot up, right?
yeah,
So you had those 2 years of bull market.
yeah. That's when I was just cutting my teeth as well, and I
Right.
thought I picked the best sector in the world, and
People were
a lot
making
of
money. There
yeah.
were, share prices were high, but then 2011 hit when they started the company, and it was just a
Well,
downward.
people say that we haven't even hit 2011 numbers, but you're saying that
Well,
like in
if we're
terms of
talking gold price, if we're moving into that topic, we're at what, 1930-ish
So
1930-ish right now.
gold
Yeah.
peaked in 2011 at $1,900.
Yeah.
Flash forward 12 years, gold's at $1,900.
Mhm.
So what happened to that decade, right?
But with inflation affecting not only the cost of groceries and rent and everything else, it affects the mining industry, right?
Yeah.
So labor, fuel. I mean, look at oil's at $90 a barrel right now. The CPI numbers were just released this morning from the Fed. They were higher than expected, and now people are thinking, oh, the Fed's gonna keep rates higher for longer. That this cut is not coming, right? It's maybe they're going to increase at the November meeting. Who knows?
But the thing to remember about this space is because it's so unloved, that it doesn't take a lot of money flowing into the sector for it to have exponential returns in fast periods of time. I've been doing this since 2002. I remember how excited I was when gold went through $250 an ounce,
Yeah.
right? And then you saw the TSX Venture, which at that point in time was largely gold companies. Now, of course, it consists of Bitcoin and AI and all these other things. So it's not necessarily the best representation for junior mining, but that tripled in the span of a few years. Again in 2009, right? Gold went from what, $500 or $600 back to 1900 in a 2-year span. In the market, the equities took off. 2020 March. Remember, gold sold off, I think it was maybe $1,400. Flash forward 3 months, it was $2,000.
You ask any mining executive, what do they think the gold price is going to do? By default, just almost instinct, oh, it's going higher, right?
Yeah.
You're going to have several reasons. If you ask me, our job is to find gold at Westhaven. It's to explore, discover. That's where we feel we're going to provide the best value for shareholders is, drilling off new multi-million ounce discoveries on a new gold belt in a safe jurisdiction, Canada, near a highway, near a city. Our PEA, which we just put out, proves that we can, potentially mine this at very high margin, $1,000 an ounce US, $750 all in sustaining. That's great. But if you ask me where I think the gold price is going, I have an opinion.
Yeah.
It depends on what the Fed's going to do with the interest rates. Really, it's the Fed's got a dual mandate, right? It's stable prices, inflation, and in full employment. So right now, if inflation is starting to roll over, the employment's still very high. Let's say the jobs start to get hit here in the next 6 months. Then they might pivot. They might go, okay, well, now we're losing jobs. Our dual mandate is suffering. So now we've got to focus on the employment part. So maybe then they start cutting, maybe. And maybe that's the catalyst that drives gold higher. And all of us juniors are going to, start moving again.
Yeah. So going back to sentiment, like, are you seeing new money in the space, or are you just talking to the same guys that come to these shows?
We're in the fortunate position that our current shareholders have capital for us if we want it. So this is talking to funds that already own us.
Mm.
We don't need money right now. We're sitting on working capital of just under 5 million. That doesn't sound a lot, but again, because of where we are, our drilling costs are quite low comparatively speaking to companies exploring in Timbuktu, right?
Yeah.
I mean, we're looking at about $275 Canadian all in from per meter, compared to, say, you're looking north of $1,000 in some places, northern Canada, right? So,
But no, the funds are suffering. The funds are facing redemptions.
yes.
There's no new inflows coming in. If they want to participate in a story like Westhaven, they would have to sell another position to get cash to buy that.
Yeah. So where like people are still able to, I guess the better stories, like you guys are cashed up and you still hear about whether it be private companies right now because they don't want to go public or some of the better names out there, they're able to raise money right now. So like there's still pockets of capital out there. I guess it's just going out there and hunting for them at this point.
Well, our issue isn't, say, lack of access to money. It's the lower our share price goes, the more money we get offered.
Yeah.
It's the cost of capital
Cost
is
of capital.
prohibitive. And then we spend a lot of our time touring mining companies, and if you take money from a strategic investor such as a mid cap or a large cap, typically that comes with covenants, right? They want board seats. Well, I mean, right now, is it worth selling 9.9% of a company for a few $1 million and having to give away board seats? I mean, we're quite happy right now. We've got enough money to keep the lights on here until Q3 next year if we want. That's while drilling the entire time, and we're hitting exploration targets. We're making discoveries and advancing all of our properties.
Do you think getting a strategic, whether it be 9.9 or something larger than that, 19.9, as an early stage explorer almost removes any aspect of a bidding war in the future, or is it?
What we did last year, it's an excellent question, is we were in a fortunate position last year at this same conference to announce a transaction with Franco-Nevada, arguably the world's best gold producer, because of course they're not doing any mining themselves. They're a royalty company. It just was by coincidence they were able to announce it. So 6 months of due diligence, and just as I stepped off a plane in Beaver Creek, I got the call saying we need to put a news release together. We press released it, and walking into meetings with major mining companies, you couldn't ask for a better stamp of approval because Franco-Nevada doesn't typically make investments into exploration stories.
Yeah.
We didn't have so much as an economic assessment then. We do now, but then we didn't. And so for them to take a role with us, and now they're a stakeholder, they bought stock at 40 cents per share. We're currently trading at half that, thereabouts. So, I mean, they saw something in us that made them break their model, which is, again, is typically investing in things with at least an economic assessment. What better stamp of approval than one of the world's largest gold
But
companies?
to answer your question directly, and I know where you're going with this, yes, in a sense, and I learned this from my ex-boss, Stephen Dean, with Atlantic. He said,
Yeah.
if you do that, that 9.9, then you're basically saying no to everybody else. You're
Yes.
saying, hey, we like XYZ major company here. They own 10%. This is who we're working with. Everyone else go away, right?
Yeah.
So his strategy all along was keep our heads down, build this mine on time, on budget, show that it's profitable, very low cost, high margin. The offers will start coming. It'll be competitive based on that, right? Right now we're in such a poor sentiment down market that I think the majors themselves are sort of struggling to maintain profitability to get ahead. But this can all change, like I said, with interest rates and
Well, it
things like
happens
that.
quickly, right? And this
Yeah.
goes back again, look at how quickly the GDXJ doubled from March to August in 2020, right? So these things can move quickly from when they're depressed. And going back to the conversation, Franco, they want to see this in production. Unlike a mining company, having them as a stamp of approval, it doesn't dissuade a competitive bidding process from other mining companies, right? Also, their due diligence, we've never seen due diligence like this. To say that they went into the data room and turned every stone over would be the understatement of a lifetime. It was several months getting to the point where we were talking. And that, again, I bring that up because last year's conference, all the mining companies were saying, how the hell did you get Franco involved? Like a little junior said, how the hell did you get these guys involved? But looking forward, just going back to the comment about funds is one, we did a bought deal financing in 2021, 15 million bucks. The funds, and we call them up, we don't want to sell your stock, but we're getting these redemptions. And in a market where there's no liquidity, it doesn't take much fund selling to keep a lid on your stock. But as soon as those redemptions stop, the selling stops, then also it's not going to take much for the stock to go up. So
Who's the banker on the deal when you did the bought deal?
that was Raymond James.
Yeah.
And that was a $15 million bought deal, and that went to 5 funds did 90%,
Yeah.
with 2 funds doing about 85%.
You feel like you have the institutional background, and right now it feels like when you do a deal like that, a lot of the money is going to like hedge funds that have shorted your stock, and they can like cover, and then they're not really placing it into the best hands, but money is money. So what are your thoughts on that?
But I'd be hesitant to do, about a year ago, they came out with these life transactions, which
Yeah.
allows you to sell these deals free trading. I'd be hesitant to do a free trading deal when there's a warrant attached, because
Yeah.
inevitably what you're going to see is a large
Just
short
clippers, right?
position build
Yeah.
against it.
Mm.
And these people are basically just scalping, they're putting downward price pressure on your stock, building big short positions, which are going to get crossed off when the bought deal closes.
Yeah.
And they're getting a warrant for basically doing nothing, really.
Yeah, but I think
And money's
so.
money, though, I
Yeah,
get it.
yeah, but like so for viewers who don't know, the life financing is almost it's a newer-ish
Yep.
instrument where non-accredited investors
Mhm.
can invest in private placements now. And so in the past, you had to hit a certain criteria where you were accredited, in, I think like $1 million. Like you have to make a certain amount,
Yeah.
either hold 5 million in assets, and you're deemed sophisticated because that's what they
Mhm.
defined it as. Now, essentially anyone can invest in these juniors, and there's no free there's no hold period. So in the past there was a 4 month plus
Mhm.
1 day kind of hold period. And now, but why does that mean that there's no hold period? Just because you're accredited, there has to be a hold period,
Well,
and now you're not accredited, there's no hold period because you can.
Well, back in the day, part of the
Yeah.
reason you gave a unit offering typically is done at a discount to the market price, plus it comes with a warrant, right?
Yeah.
And the discount plus the sweetener is there to compensate people for the fact that the stock is legended for 4 months plus a day. Because if you can't sell your stock, a lot can happen in 4 months.
Yeah.
Also, if you're a fund, and I've heard this from a few different funds, is they don't like restricted private placements because it shows up as a zero on their balance sheet, which means when you're a fund and your personal performance is monitored on a quarterly basis, and you're basically taking some of that principal out of your assets under management and putting it outside, and makes your performance look bad as well. Funds prefer free trading, investors prefer free trading, but again, it negates the idea of having to give a discount and a warrant on the deal.
But wouldn't the selling act as like similar to flow through, where these guys are just blowing out the paper because they got their tax credit?
But flow through, I believe, is still legended for 4 months plus a
Yeah,
day.
but selling is gonna come.
You do. I mean, so I can comment specifically with regards to the tax benefits of a flow through private placement. So, hypothetically, you buy Westhaven, $10,000 worth of Westhaven in British Columbia. If you factor in your tax shield plus your tax credit back from the British Columbia government, your after-tax cost for that $10,000 is somewhere around $3,000.
Yeah, so they don't care. They'll sell it.
They don't
right?
care.
Yeah.
So that's why if you're doing a flow-through transaction, you have to ideally ensure that the people whose hands you're putting it into are strong hands.
Yeah.
And last year we did a flow-through transaction before the Franco, and I met with one of the funds yesterday, and they still hold all their stock. But the reason we did a deal, and this fund was the anchor investment in this, it was Dundee, is because they took the time to fly out from Toronto to visit the property. They did their due diligence, right? Those aren't the actions of someone that's going to sell the stock in 4 months.
Yeah. That makes sense.
Yeah.
All right. So what gave you the mining bug? Did you invest personally, or was it your family that got you into it? Like
I was
you have
pulled
a big
kicking and screaming into the resource space because when I got out of university in 2000, I moved to Dublin. Dublin was the back office capital of Western Europe. I have a British passport. Everything was tech. My old man was a mining broker. And the tech market collapsed in 2001. He said, listen, I know it isn't as sexy as tech, but why don't you come and check out this mining stuff? And then we were fortunate the first few deals we did, there's some serious returns. I mean, we financed U.S. gold, and then McEwen's company took it over shortly thereafter, and we saw a 10-bagger. Like one of the first deals we did was a 10-bagger.
easy.
And then all of a sudden, it's like, wow, okay,
Yeah.
you feel pretty good off that. And then we had a really good mining analyst working for us as well. Dorothy Atkinson, who's PhD economic geologist, she retired because she was really good. She was able to retire about a decade ago, but she kept picking winner after winner. And then I thought everything was gravy up until 2008, at which point you saw, the damage that funds that need liquidity can do to stocks when they need liquidity. Stocks go from $5 to 5 cents overnight when they dump 10 million shares into a market no bid.
The returns are there. I mean, when I started at Hunter Dickinson years ago, when your wife was working there, it was 2008, right? And I just said to myself, what an idiot I am, right? The Lehman Brothers had just collapsed. Here I am joining one of the riskiest sectors. Everything just went, I mean, the S&P 500, everything, including mining stocks, went to, there were 4 or 5 cents a share, things that were $2 a few years ago. But, you're telling people about the story then, you're bringing in some new investors that are seeing value. And then what happened? Well, things started to go up, right? And next thing you know, people are up 500%. And they're going, whoa, this wasn't too bad for 2 years. And that's what really gets you excited, right?
Yeah.
And a transaction happens, right? You get taken out and people are liquid, they got cash. And that continues, and then you get another downturn, right? And then it resets and everything happens again. And so, look, the returns are there. It's a risky sector, yes, but with risk comes high returns. So if you're looking for that alpha in your portfolio, you're not comfortable or you're bored making 5% on a Berkshire Hathaway or a Royal Bank or what have you, that's where you're going to get it, right? Maybe the opportunity today with the sentiment being so bad, everything being so down, maybe this is a time to start looking at these juniors again.
Well, I feel like I've been preaching that story for a while now, but
the thing about the space, though, is speculative capital is fast money, right? It jumps from Bitcoin to lithium to AI, and it doesn't take much. All it takes is 1 or 2 big winners, and all of a sudden the hot money is going to flow out of wherever it is now into whether it's gold or silver or cobalt or what have you. Like, we've seen how quickly these markets.
It's a small market, right? It's not like there's a lot to go into. So it doesn't take a lot of big money to move this sector higher. And then
we've asked this question, and I'm starting to not like this question. But like, what's going to be the turning point, the inflection point? Like, what's going to?
I said it before. I think
rates.
I think it's when the Fed realizes that the employment picture is getting worse and worse. The higher rates. Look, you remember, they went from the Fed was saying, "Oh, inflation's transitory. Don't worry about it." Right? For a year, they were pitching this transitory narrative. They were wrong. Inflation went crazy. They embarked on the highest interest rate increasing in history. Like, we're up to 5% right now. When the employment picture starts to get worse, I think that they go back to that dual mandate. They go, oh, now we got to start worrying about full employment again. Then they start, either backing off or cutting. Maybe gold hasn't moved to 2,100, 22.
But we were all waiting for 2,000 gold, and we hit 2,000, and that didn't really do anything to stock. So is everyone re-rating and saying, wait till gold goes to 2,400? And
maybe it has to do with margin. Maybe these majors need to start showing shareholders, hey, at 2,100, if we go back there, we're making a pretty good, healthy margin here. And by the way, we're starting to pay dividends to you shareholders, so we can compete with the Apples and the Microsofts and the bigger companies out there. Like, this sector is relevant. Look, we're making healthy margins, giving it back to shareholders. Maybe we need to see more consolidation, right? Less companies.
Maybe it has nothing to do with gold price. Maybe it has to do with people actually starting to see returns in the actual mining stocks. I mean, what we haven't seen really is a lot of M&A action at the junior or mid-tier level. But what's given me a lot of, say, positivity during this conference, despite the shitty markets, we're allowed to swear in this thing, but despite that, is the mining companies, the reason, and again, we're meeting with $25, $30 billion mining companies, they're looking for exploration. They're talking to us about having the mandate to really ramp up their M&A activity, their exploration programs, et cetera, in the next year or so, because they've spent the better part of the last 5 years rationalizing their other deposits, selling the things that aren't key to their deposit, paying down debt. Now they're in a position where the margins. The average AISC, average all-in sustaining cost for production, it did pop Q1. I think it was the average for the big boys was $1,250, but it's coming down again. as they get better cost controls. But they're making money hand over fist, these companies right now. They're paying down their debts. They need to replenish their pipelines. Maybe it's this M&A activity that's inevitably got to start, that's going to kick off money flowing back into the junior space.
Do you need like a fairly robust ESG mandate to have the possibility of getting the big money into you or being acquired, or is that all, do you think that's all show for? Yeah.
So the companies we speak to,
Yeah.
they have their own ESG initiatives and they have their own ESG standards. And
Do you have to check their ESG boxes?
we do. We started ESG. We started looking at our ESG monitoring a couple of years back now. From an environmental perspective, most junior companies can't say this, but we're in our third year of environmental studies. So we're
Yeah.
looking at water, we're looking at
Yeah.
birds,
Well,
bats, etc.
environmental has always been important to any explorer, but what about the other mandates that have?
So we
Like-
monitor this
Yeah.
as well, and so we're one of the largest First Nations employers, Indigenous employers in the
Yeah.
city of Merritt. A majority of our staff there are from local to the city of Merritt. Without local support, nothing's getting done regardless.
Yeah.
We've been working here since 2011, and it's just, open, transparent, and making sure everyone gets a piece of the pie.
Makes sense.
Yeah.
Be equitable. You have to go down that route.
Another
Right?
thing we should talk about is investor psychology and sentiment. It's funny because, when times are good in this sector and people are making money hand over fist, right? Oh, you bought this and it's up 5x. The conversations and the psychology is totally different. You're talking about, stocks that are already up 500 and you're talking about buying more of them and because things are good, right? And it's almost that FOMO, that fear of missing out,
Yeah.
that really takes hold of psychology in human beings. We're funny creatures that
I feel like that's in the battery metal space, like lithium, right?
Yeah.
Like
or AI
the,
stocks or
the shoe shine boy indicator.
Yeah.
Like back then it was the shoe shine boy telling you to buy a stock.
Yeah.
And now everyone says taxi cab or Uber driver.
Yeah.
And it's all lithium right now.
Yeah.
No one talks about gold.
So in the golds, we're at the exact opposite of that. Right? We're
Yeah.
at the maximum pessimism, so maybe, just maybe, this is a time when we should be looking at these things, right?
Yeah, but everyone's saying like invest, like double down now. Like now's the time to press, but no one has money to do it. So
No.
yeah. So how can you take advantage of
Well,
depressed markets when everyone else is depressed?
a meeting the other day, I think a very wise individual had said maybe it is M&A. Maybe we need to see some transactions happen.
Yeah.
But with that one, make people liquid again.
Yeah.
They've been holding this stock for so long, it hasn't done anything, and then all of a sudden an M&A transaction's happened at a 50% premium, and they've just got cash deposited into their spec account. They're going, okay, I'm whole again. What should I be buying?
That's normally a lot of people say that that's also a bottom when you see a firestorm of M&A activity and you have that consolidation, and then people can start putting money into
I'm
the
curious
explorers and stuff.
what's going to be announced at Denver Gold Forum next week.
Yeah, there's a rumor. There's a
What's the
rumor
rumor?
that there is going to be some sort
There
of
always
acquisition.
is. There's always a big announcement at Denver Gold.
Yeah. Or BMO conference. There's always.
Yeah. So we'll see. I mean, something will pop up.
What do you think is going to happen?
There's got to be some type of merger.
Oh, it's Barrick and First Quantum, right?
There's got to be some type of merger of equals or some type of M&A transaction that's gonna.
They're saying Barrick finally got First Quantum.
Really?
Okay.
That's the rumor.
That's exciting. But it also shows that Barrick, primarily a gold producer, now moving into the copper space.
Yeah.
Well, I think they want to capitalize on the green metals movement, right? So they're realizing that the future, although gold has been their cornerstone business, that maybe they should get some green metals, i.e. copper, into the portfolio just to prepare for the future, right? Yeah.
Well, gold has always been that a byproduct of copper, but he's been pretty vocal about saying how he wants to move into copper. And is that him just tapping out? Isn't that bad for the gold space?
I think gold will always have a place in, it's been money for 10,000 years. It's proven to be relatively stable over time. And
did you ever get into Bitcoin? Did you ever buy any Bitcoin?
Yeah. Well, believe it or not, I had a very, very small account at Quadriga CX. And that was that was that big story in Canada where the owner, the starter of that, disappeared, died.
Oh, he got killed in India or something.
So my account was, I'm talking very small, but my account was frozen. Meanwhile, Bitcoin went on a run, and I'm going, I'm rich, but no, I lost all my money on that one. Very small, thank God. But that just shows you there's still fraud inherent in these platforms. And do you really own the crypto that you just bought on this platform? Does someone else hold the keys? And
They're going through fraud, but the gold industry went through. There's still fraud in the gold industry, right?
yeah, I think it's a little more strict now with
The
43
43
101s, and they're cracking down. The Bre-X days, I haven't seen too many stories of that.
We need a win, eh? Did you have big celebrations when you had your companies acquired?
It was the best feeling in the world. It
Yeah.
was life-changing money, right?
Yeah.
It was.
What'd you do?
I took my family to Asia. We went to Disneyland in Hong Kong, of all places, which was amazing.
How about you, Sean? How do you celebrate your wins? I'm gonna force, if we think positive here.
Well, my background was as investment bankers. The wins come fast, but then as soon as you close the transaction, right? So let's say Staccato, which is Gareth's company, you raise $20 million for the company, you get your 7% commission. Well, you celebrate that night, but then you've got to worry about where's your next deal coming.
Yeah, Gareth had that win. I didn't know that he had a win. I thought he was kind of he's not here, I can say it, kind of the black sheep, because his dad is a mining Hall of Famer. Obviously, his sister's had some high profile wins, and she's been a part of big companies, and she's been a great voice for the mining sector. And
let's bounce that question to you. You've had some big wins. How did you feel? What did you do?
I'm in the background. I don't like my minor wins in the old TD Waterhouse account.
You've had some nice.
What did I do?
Went for state.
Yeah, I didn't really celebrate my wins. I spend money regardless. I'm perpetually broke. I've been in this sector for so long, I don't even know what it feels like anymore. But when Hulk they're like, "What's your secret?" And he's like, "I'm always angry. Like I'm always tired and in the grind." So I'm used to it now.
Yeah.
I wouldn't even know how to feel if we have a win. It's probably just on to the next thing because you don't know when it's going to happen again.
You'll be made whole again, and you'll be like, okay,
yeah, make me whole. Yeah.
Well, that's it. You're always going to be working on your pipeline regardless.
Yeah. You always want deal flow.
That's it.
Yeah. Are you putting your money into any other deals other than Westhaven, or is it all?
I have
all in Westhaven. All chips in here.
I have a young family in Vancouver, and for viewers that don't know, Vancouver is one of the most expensive cities in the world. Rent. We have a housing crisis, so my money is going to Air Jordans, Nike outfits, kids' activities, and all of that stuff is very expensive. So until the sector turns around, I'm taking care of the family for now.
Taking care of the sneakers.
I'm sure you can relate.
Yeah. I buy sneakers for myself sometimes. Okay, so any other points? You guys mentioned Westhaven a lot. You threw it in there. We were going to wait till the end, but that's okay. We want to get more eyeballs on the story. What are the catalysts on the horizon like?
Discovery. We're in the fortunate position that we have money, and so this year our focus has been drilling at the shovel nose, but big picture, we're working all of our properties. We had the better part of a decade to assemble this property package in the Spence's Bridge Gold Belt.
Yeah.
All of the properties are being worked. We're generating drill targets for next year while also advancing our shovel nose. And we've made a couple discoveries at the shovel nose this year that we'll be talking about hopefully in the near future.
Who's the other district size play in BC near you guys?
Talisker.
Yeah. They just rolled their share back. How come they haven't been able to weather the storm as well as you guys?
I think I'll give the safe answer. I think you'd have to talk to Talisker about that.
Very good group of explorationists.
Yeah, but they're like almost a comp to you guys.
Very seasoned people. I mean, they know what they're doing. I always give my answer. I say, reach out to them. They'll give you the real story. They'll give you the perspective. There is a story behind them coming in, which Sean tells. Largest online staking rush in BC history.
It's the largest staking. So in 2018, before we announced our big discovery at the Shovel Nose, a majority of the belt was unstaked. And because Talisker, and again, very experienced explorationist responsible for discovery of multiple properties, because we had a CA in place and they'd be looking at our data, well, they wanted to come into the belt. In most confidential agreements, you have what's called an area of interest clause, which basically excludes companies from staking within a set number of kilometers from your properties. We had a 10-kilometer area of interest clause within our agreement. So basically, you wrap that around our 4 properties along the belt. It meant they couldn't come in unless we did a transaction. So we collapsed that area of interest clause to 0. They staked pretty much every claim in the belt that wasn't taken by somebody else. Apparently, it was 2 geologists, 6 credit cards in the dead of night. The largest staking exercise in BC history. And in exchange for allowing them into the belt, we received a 2.5% NSR on those claims, which subsequently we sold to Franco last year for about $1 million Canadian.
Yeah, good return.
And
We had, that's good.
what I was going to say is, in the news release announcing this staking exercise, the person in charge of that company at the time, a gentleman by the name of Tom Obradovich, he was part of the team that made the Fruta del Norte discovery. Well, they said that the reason they staked this belt was because they believed that this belt had the potential to host multiple Fruta del Nortes. Obviously fantastic, arguably one of the best discoveries in the last 20 years is the Fruta del Norte. We've gone on to prove that model to a certain extent at the shovel nose, because the south zone also appears to be a polar part basin, which is what the Fruta del Norte is. So we're hoping to find many more of those Fruta del Norte type discoveries at the across our properties.
I think if I can give my closing point or closing statement, is very Westhaven related. I'd say, look, if major mining companies, major gold companies, mid-tiers, et cetera, you remember they have a depleting asset, right?
Yeah.
It's every year their reserves get smaller and smaller. It's getting harder and harder to find new good discoveries that are economic in safe jurisdictions, not places where their asset might get expropriated or taxed to high hell because of some new government that's come in. If you think that these companies need to replace those resources in the next 5-10 years, you better believe they're looking to stable jurisdictions like Canada. They want high grade off a highway. They want scalability. They want you to show a district play, right?
Yeah.
On a new belt in a new area, which ticks all of the Westhaven. But we have all of that. All we need to do now is make new discoveries, drill, find more gold, build. Eventually, I think someone's going to look at this and go,
Yeah. And that one point, which has been within our mandate, within our group, whether it be investing or putting together companies, is that district size play. It's almost a cliche now, but we know that investors and institutions and majors don't want one discovery. They want the potential for many, many discoveries, because they want to be the ability to replenish their reserves and resources in one shot. So I completely agree with that, but it's also hard because you need a lot of money to explore those sizes. But you guys have been able to do it, and fairly able, like, weather the storm. You mentioned you had 140 million shares out, majority owned by you guys, so funding it with
and we still have cash, and we're still drilling. And when this market turns, we're going to be very well positioned to participate.
One of the benefits of our location is that we can work year round.
Yeah.
It's not as if we have to deal with 20 meters of snow. We're drilling in January, we're drilling in August. It's if we started getting rewards for coming out with 400 or 500 gram meter intercepts, we can go from 1 drills to 3 drills in relatively quickly, right? So we can move quickly when the market turns.
Very cool. So we'll put that on our radar and watch you guys with interest. I've always followed you guys because you guys are friends. So
Thank you.
Fingers crossed, and let's hope the rest of your meetings go well, and hydrate yourselves and don't stay up too late.
Eat some steak.
Eat some steak and
Eat the fat.
So he says eat the fat on the steak. You say eat the fat on the steak. Okay, I'm learning.
We're in a bear market. You gotta
Yeah,
can't waste anything.
that's
right.
right.
This is
Okay,
not a bull market.
let's finish there.
All right,
That's a
we're done.
perfect.
Thank
Yeah.
you.